For plebs, by plebs, dropping the Bitcoin-only signal. Pleb Underground. Welcome everyone to the Pleb Underground.
Pleb Underground, first episode of the new year. Central planners plotting the next new fear to control the population. Statists shower them with adulation. When their party wins, they think it's time for celebration. Red or blue, there's no time to be stationary. You get back in your pen, you're just stationary. It's time to write, to read along. Use media that knows right versus wrong. MSM is filled with paid shills and rats. Our guest Odell teaches privacy and tells the plebs to stay humble, stack sats. But he's a 1031 VC. When you hear a rhyme, you don't see the grammar. Bang, bang. Who's that slime? He's an altcoin scammer. Orange washing once again. It's that time in the bear. You're here with Pleb Underground. Happy New Year.
All right, you guessed it. We've got Matt Odell joining us. Guys, if you don't know who Matt is, you should. And if you don't, we're going to post all the links for all the amazing things that Matt does. Tales from the Crypt, Citadel Dispatch, 1031 VC. I mean, look, it's Bitcoin everything. Matt, thank you so much for joining us on the show, man.
The pleasure is mine, Phil. Thanks again for having me.
Sweet. Sweet. All right.
Well, welcome. It's nice to be hosting you, rather than the other way around.
I like what you all are building over here. I hope this is my first of many Pleb Underground appearances.
We hope so too, man. We hope so too. We really appreciate it. All right. We are going to dive right into the numbers.
Yeah, the numbers, of course, brought to us by Timechain Stats. And please check out Timechain Calendar for a new way to browse the Timechain.
At the time of this recording, the block height is 770,703. The Bitcoin price, 17,024. I feel like that's, wow, not bad. Anyways, total public lightning capacity.
Tell me Moscow time.
I'm sorry?
Tell me Moscow time. Like, I don't
you want to know the Moscow time? Okay, 58.74.
Price.
I know you don't, but Walton, a lot of the listeners care about the fiat exchange. Okay, so we got to give it to them. The total public lightning capacity 5,164.8, and the chain rewrite days 845. I feel like these numbers are eventful.
Hey, block height always goes up.
Yeah, block height always goes up, and you seem to be liking the Moscow time, so we'll go with that.
That's the important thing, though. Like people should recognize is that block height always goes up. That's quite significant.
It was interesting you called out. They say
you give a man a fish and
Walton,
he can
let Matt
feed
talk.
A family. But if you give a man a poisson distribution with a mean time of 10 minutes, that you can save humanity.
Nailed it. I like the chain rewrite time. That was a good call out. That's pretty high, right? That's historically pretty high right now.
It is. It's like we were set. I was trying to create, you know how it goes, right? We were trying to create correlations with the numbers. So at one point I was thinking that as the price was going up, the chain rewrite days were also going up, but then all of a sudden it was a counter indicator, and then the chain rewrite days ended up dropping as the fiat price went up. So obviously my whole theory made no freaking sense and was bunked. but here we are at like 16K and chain rewrite days 845, man. Like think of how much resources it's costing to try to attack Bitcoin. 845 days of you are owning 51% of the hash, if I understood this correctly, which is good luck.
Yeah, it's an interesting stat. I think it's basically just another representation for the difficulty adjustment, I believe. Oh no, but it's related to also cost per terahash, or maybe no, it can't be related to cost per terahash because it's just days. It's not cost. There's another factor. There's another variable in there, right? What's the other variable?
I have no idea. To be honest, I don't know what the other variable
Well,
is.
this is how we learn things, Phil.
Absolutely. Yeah. I'm going to
continue.
Google it and then I'm going to put up a screenshot about it when I do the edit of the show.
Yeah,
Then we're going to learn, and then we're all going to learn it.
Well, I mean, the deployment of new hash rate quite often isn't correlated to price because it's been planned in advance, especially when it's in large amounts by some of these bigger companies. Like they've ordered these large amount of miners, you know, a year in advance or something, and they're going to deploy them on a particular date, given a particular order, irrespective of the price.
I feel like Matt's looking this up.
Yeah, it's proof of work equivalent days to rewrite the complete BTC chain with 100% of available hash rate.
100%.
You can rewrite the whole
it
chain
would be,
in
Phil.
845
It would be like
days.
50%, wouldn't it? Like it's matching it.
No, it is. It's 100% of the hash, but you have at least no.
Yeah, it's 100% of the hash.
It's 100% of the hash. Yeah.
The current hash rate. Yeah.
Okay.
It looks like it kind of just trends around 800 recently, at least. It's interesting. Huh. It's a
It's going to
stat
take
I
a lot
hadn't
of
really
power.
thought about. It's a stat I hadn't really thought about for like 5 years or something, 4 years. It's interesting because it was really
Cool.
big during the BCH Bcash wars. Because if you were going to attack the other chain, it was like how long is the rewrite days if like Bitmain was going to attack BTC, and vice versa if someone wanted to attack Bitcoin Cash.
It's like a measure of the cumulative security, you could argue.
Speaking of Bitcoin Cash, their narrative is totally fucked. Here we go. Documenting BTC. User just says $220 million for 22 cents. So
are you sure
look,
they did? Because documenting BTC has fucked that up before.
he has, but he hasn't deleted this one yet, and it's been up for like more than I think 24 hours.
Wait, click the transaction. Let's see if it's a change.
Hold on.
Sometimes it's the change. Yeah, it's the fucking change. He fucked it up again.
He fucked it. Okay, so that didn't happen.
Yeah, someone sent like 22 cents for 22-cent fee, and then the change was all the rest of the money. Do you see why I say it's the change? Because the sending address, right? When you do a Bitcoin transaction, you have the input.
Yeah.
And then you have two outputs, right? One is change, one is who you're paying. On the output side, there was two addresses. One address was wrap SegWit, starts with a 3. One is native SegWit, starts with the BC1. The input's a wrap SegWit. So the change is the same, right? You're not going to pay yourself change in a different address type. So the change is the same address type. It's the common address type heuristic.
Okay, so see, this is why it's good that we have more than one set of numbers for Matt, because Matt just debunked documenting BTC's tweet. So we've got this one though, okay? And Matt, I'm gonna have a question for you on this. All right, so look, here we go. This is a tweet from @peer-to-peer. Bitcoin turned 14 today, and in the last 14 years, it achieved the following: $1 trillion market cap, 6 billion% caca price increase, 99.99% uptime, declared dead 467 times. Maybe it's up to 468 or 469 by this point because this is a couple of days later. 91% of the supply mined, hash rate at 294 exahashes, which obviously is debatable because it's an average and it's calculated daily, and plus 793 million transactions. All right, Matt, since this is our first episode back from the new year, what has Matt Odell bullish for 2023?
Oof.
Okay, maybe I'll make it simpler. Which project? Is there a specific project?
No, I mean, look, I'm bullish on Bitcoiners. I'm forever bullish on Bitcoiners. And the coolest, one of the greatest things that I've been involved in is grassroots Bitcoin adoption, which is like all these different meetup groups that are all around the world. And it's so strong right now. I've never seen anything like it. Like I'm recording right now from Bitcoin Park in Nashville, and like we're getting 200 people at our monthly meetups in the middle of a bear market and a recession, which is insane. Like even the old New York Bitcoin community used to be really hardcore. It was like the original Bit Devs, and that was a highly technical group, right? Like what we weren't talking about price or anything, and it still would cut in half during bear markets, let alone a recession. So that's fucking amazing to see. And particularly on that side, like I would like to see more of these communities kind of focusing on supporting their own local communities outside of Bitcoin and kind of bringing in as many merchants as possible to start accepting Bitcoin, because one of our main vulnerabilities for a while has been these on-ramps, off-ramps, these regulated on-ramps, off-ramps. I mean, this year has proven that case amazingly. Like, I mean, it sucks for people, right? But people are learning why there's risks using these centralized custodians, because of fraud, because of rug pulls, but also, regulators are coming down on them with KYC regs. So I think we'd be in a way better position if I could easily spend Bitcoin, if Bitcoiners can easily spend Bitcoin at local merchants, because then it's distributed. Hopefully they're running BtcPayServer, right? It's open source. They're not using a custodian themselves. And then it's good for these local businesses because, first of all, they're already getting crushed by Amazon and the big corporate types.
Yeah.
So if they can have people that are dedicated to wanting to spend at their store, that's always a win for them. I mean, the lift isn't that high for them to start accepting Bitcoin if they have a friendly Bitcoiner help them do it. And then obviously the benefits we always talk about, which is they get around that 3 to 5% credit card fee, and they get around chargebacks, right? Chargebacks especially on online stores is really high. It's like almost 30% fraud rate, which they kind of have to factor into their equation. So greater merchant adoption, greater grassroots Bitcoin, very, very bullish on it. And then self-custody all-time high. We have never, as far as I'm concerned, if you don't hold your own Bitcoin keys, you don't actually hold Bitcoin, you hold IOUs.
Absolutely.
So I would,
not your keys, not your coins.
So I would go even farther and say not just self-custody all-time high, Bitcoin ownership all-time high. We've never had more Bitcoiners than we have today, because you're not a Bitcoiner unless you're actually holding your own keys.
And actually, I have a piece of news that perfectly reflects exactly this. Of course, the US court granting Celsius the ownership to the customer deposits, not your keys, not your coins.
100%.
Celsius. That's just awful.
Hey,
that whole
it's only
situation.
incels.
It's amazing that they, like, so many people used it and like they had so much funds on the platform. I mean, until shit started to go bad, like they weren't even on my radar at all. I mean, like I knew there was this like scammy looking thing called Celsius, but I just assumed no one really took it seriously.
You know what? Pomp had Alex Mashinsky on back in, I don't know, I think it was like 2018 or 2019 or something. That's when I first heard about it. And back then they didn't have a shitcoin yet. And I remember, like I had just gotten REKT in shitcoining and was just learning about Bitcoin only. And I was like, you know what? I'm like, this is a place where I could put some Bitcoin and try to earn some of the Bitcoin that I lost back. And I'll tell you, man, as soon as they started shitcoining, that I was like, okay, I'm like, this is the same scam as all the other scams. I'm like, I'm getting the fuck out of here.
Oh, but you had deposit in.
Yep, I did. I had it a long time ago.
I mean, obviously they were like neck deep in shitcoins, but I don't think the issue is the yield concept. It's not even like I think you could go Bitcoin only, and if you're offering it, you're probably going to get wrecked. Like the company is going to get wrecked, the users are going to get wrecked. Like you're lending out an extremely scarce asset, trying to chase this quote unquote yield, chase this interest by loaning it to degenerate traders who are mostly going short. Like I don't know if it's the only time it kind of makes sense to me is if the loans are over collateralized, because Bitcoin is super liquid, so you can you can actually just liquidate the borrower if you need to claw back that money.
Yeah.
But the thing is that's kind of it doesn't go with the way these large yield providers were working the system, because they wanted higher interest rates. You don't get as high interest rates if there's over collateralized loans, and it's just like people are greedy, so they always want higher loans, higher interest.
Can you explain to our listeners / viewers where real yield comes from in terms of investing in companies and is it 1031 or 1031?
1031. We're named after White Paper Day, October 31st.
Okay, so can you tell us a little bit about 1031 and where real yield comes from? Because there's certainly a couple of people on Twitter who are not very happy about the idea that there are such things as Bitcoin VCs.
Yeah.
I have mixed feelings on the concept. I mean, I think there are certainly kind of companies around Bitcoin that provide a whole bunch of useful services and tools, and they have to get paid somehow. But yeah, maybe you can tell us a little bit about the
let's talk about
space.
So I have always had a bad taste in my mouth about venture capital, period. But mostly it's because I've been in the Bitcoin space for a while, and my exposure to venture capital is VCs that operate in the Bitcoin and quote unquote crypto space, right?
Mm-hmm.
And they're usually assholes. They're usually massive shitcoiners. They have perverse incentives. They want you to launch a token. They want you to launch a token and give them a bunch of the token, and then they want to get it listed on Coinbase and dump it on retail, and they lie about what they're doing and all this false marketing and not disclosing trade-offs, whatever. Like, you guys have seen, everyone's
they were
seen
doing it before shitcoins, right? They've been doing it for like 20-30 years,
right? But shitcoins were the best thing ever for them, because they could just immediately dump it on retail.
Do so much less,
lower the cost,
and get so much more.
Yeah. They didn't have to wait to go public to like dump it on retail, right? So if you asked me 2 years ago, like, the last place I ever expected to be was building a venture fund, right? Now, but as a result of that, what we've been seeing, right, is we see great Bitcoin projects in the space that have extreme difficulty getting funding that they need to grow, right? Like, if we want to see Bitcoin companies, a lot of us use these Bitcoin companies, right?
Like,
if we want to see them, SeedSigner is not a Bitcoin company.
Give a couple of examples, maybe.
Okay, so first of all, one thing we do is, SeedSigner is not a company, but we do give open source grants, no strings attached as well. And like, SeedSigner is a perfect target for that. But company wise, right? So a perfect example of why I'm glad that we are building 1031 is something like Unchained Capital. Unchained Capital was considered essentially a direct competitor to BlockFi, right? But they didn't do shitcoins. They didn't do that interest yield product for users, right? They didn't have like a quote unquote yield savings account or whatever, where you deposit money and you get paid interest. They didn't have that. They just did collateralized loans, right? And all the traditional sources of capital, particularly in like crypto VC land and everything, wanted them to do the BlockFi model. They wanted to rehypothecate as a service. They wanted to lend out customer Bitcoin. They didn't want to do native multi-sig. They didn't want you to hold a key and be able to see it on chain. And BlockFi went up to, what was it, like, get on board, rocket ship. It was like $4 billion valuation, and Unchained was way under $1 billion and couldn't raise any money, right? Meanwhile, now at this point, BlockFi is worth zero. Everyone lost their money on BlockFi. Unchained by design has no rehypothecation, because you can see it on chain when you take out a loan with them. And they had this low time preference, long-term thinking, Bitcoin only thinking. And as a result, those users are better off. But they needed a partner that were actually Bitcoiners, right? That wasn't like every time they had to like re-explain like why they care about Bitcoin, why low time preference, why all this other stuff. Another example is, I'm trying to think of who we can talk about. Another example is like the Nodl guys, right? So Unchained is probably one of our bigger projects that we've supported, bigger teams that we've supported, bigger checks. Nodl's on the smaller end. We have a lot of these great Bitcoin teams that don't need as much money, but their business model isn't necessarily very clear to like a non-Bitcoiner type. Nodl's completely open source. You can just take the code and you can fork it. Like, what is the business model there? Like, why is this important? Why do people need to run their own nodes? They can just run it on AWS. Why does it matter that there's bare metal servers, that they control their own servers? So we understand that, and we consider that valuable. So the way we kind of look at these companies is, first of all, are they focused on actually just, being sustainable cash flow? We call them SATS flow businesses, sustainable SATS flow businesses. They're most of them are bootstrapped. They're making money. They're not doing this kind of like growth at all costs and then try and do an exit or something like that. They're just trying to make Bitcoin, because the sooner they make Bitcoin, the better, because Bitcoin's going to go up in price over time is our expectation. And then the second thing is, does it actually support the Bitcoin ecosystem? Does it make Bitcoin stronger? And then we call this like a flywheel effect. If it makes Bitcoin stronger because all of a sudden the economy around Bitcoin is more robust, then as a result, Bitcoin price should increase. So, and then that brings me to the third part that I think makes us very different is, first of all, we don't raise from plebs. Like, I think plebs should just stay humble and stack sats. These are like high net worth individuals. They're endowments, right? They're large institutions that want to deploy a lot of money, and they don't want to put it all into just Bitcoin. And they'll probably go to a crypto VC or an A16Z, like one of the traditional Silicon Valley VCs, if we didn't exist in the first place. So they're going to send this money somewhere. And then the second thing is, we tell all of our investors, first and foremost, they should be holding Bitcoin. They should understand Bitcoin, understand the long-term value prop, and hold Bitcoin. And that, we hope, we never tell them like, oh, we think we'll outperform Bitcoin.
Do you account in Bitcoin?
We try
or
to,
in
of
dollars?
course. Oh no, we account fully in dollars.
So I think
Okay.
I think there's
But,
also
like,
oh, go ahead.
No, I think, like, obviously we want the fund to perform the best it can perform, right?
Obviously.
Like, we're not trying to invest in companies that we think will lose us money. We're trying to invest in companies that will bring back significant value to investors. But we're also actually Bitcoiners, so we understand that, Bitcoin has massive upside potential, and it's very rare for people to outperform Bitcoin.
So is it a kind of, do you see a bit of a weird mix of almost Bitcoin philanthropy as well as investing in Bitcoin companies, that you're actually trying to drive and catalyze positive change, and in doing so, the effects on the fiat exchange rate of Bitcoin are so significant that it doesn't really matter what you put into these companies?
Yeah, I mean, I wouldn't call it philanthropy.
Maybe it's the wrong word, but
I think basically when we look at every project that we support, it's a twofold, right? Is what is the investment case for this project, and then it's what is its impact on the Bitcoin ecosystem if it survives and thrives. And will that make Bitcoin stronger as a result? Will it make the Bitcoin network and protocol and community stronger? And that second element is something that I imagine, I mean, I haven't been in the venture world for very long, but I've been watching it externally, and I think that's very unique in the venture world. And I think that ultimately, I've spent a lot of time in this space, and I have a decent understanding. I'm humble enough to understand that there's way more that I need to learn, and I don't know everything. But I have a very strong understanding of all the different projects in the space, how they interact with each other, how they interact with the network, friends with a lot of the people that are actually the teams running these things. And I've seen firsthand that they just don't get the support they need.
Yeah.
Right. So if someone has to do it, and it was like a right time, right place kind of situation, and it's been very, very rewarding. It's been fantastic, and we've been completely vindicated. I mean, the haters, can come out. There'll always be haters, no matter what you're doing.
Yeah.
But at the end of the day, the thesis, the Bitcoin thesis, which is our thesis, it's not like it's a unique thesis, has been vindicated way quicker than we ever expected. Like, if you look at A16Z, REKT, Sequoia, REKT, these are two largest VC firms in the world, right? Multicoin Capital absolutely destroyed, right? Paradigm, REKT. Like all of these crypto VCs have gotten completely destroyed. And you know, it's such a weird bragging point. We've invested in over 30 businesses in Bitcoin, and none of them have gone bankrupt. You know, like that's right now, it's a very strong situation to be in. Most of them have 3 years to operate in a bear market. If we have a 3-year bear market, they're built to survive long term. And their business models have been vindicated because the high time preference kind of shitcoin way of thinking about things, they've all gotten wrecked.
Yeah. I think you make an excellent point, and just going back to this idea. I know that it's not philanthropy or anything like that, but I also think that it is, to your point, these people would be going to the shitcoiners and the traditional markets for their money. So why not actually get it from Bitcoiners who understand the landscape? And I also kind of like the angle that you're taking of like you're going to where the puck is going to be, not where it is. Like I can see from at least from what everything I know about you, like from your angle, that it's like you see that these things are going to be extremely important in the future based on our current trajectory. So you guys like. And I think that's saying, look, man, I think that's important. And if you're not going to do it, sorry, but somebody else is going to come along with maybe not the noblest of intentions and maybe a different way of doing things and maybe getting everybody wrecked, and they decide to do it. So you know what? Hats off to you, man.
I think the way that I meant to phrase it was that you're investing in companies at different stages in their growth. Some very early. Those are the ones that I was referencing as philanthropic. The idea that you see their vision and you're buying into that, but they haven't necessarily got the business model yet. And then there's more established ones. Certainly, you'll be pleased to hear that your Unchained Capital, their rival, of course, recently becoming shitcoiners, lost a subscriber with yours truly sweeping all his funds away the night before my subscription renewed this week. It was fun. Setting up multisig easily using NFC now is just, guys, it's so easy. You can do it in minutes to set up multisig. It's so easy.
All right, we have to move it along to the REKT segment. But before we go there, I feel like Matt wanted to say something.
No, I mean, I think you nailed it. We're trying to skate where the puck's going, and it's interesting. It's an interesting change in my life trajectory doing this, because I'm a Bitcoiner. I am so far from the venture world, it's not even fucking funny. And we're building out in the open. All of the companies we support are at 1031.vc. So I know we're gonna get haters. I'm used to getting haters. Like I think like if you have any kind of audience or platform, you're gonna get a lot of haters. I don't block anybody on Twitter. I respect most of the haters. There's a few I don't. And they can go fuck themselves, but I won't block them. And they're welcome to say whatever they want to say. But I think just another good example that I want to highlight, because obviously the big ticket ones are the ones that people pay attention to, right? Like us leading the strike deal, which is was a massive deal, right? It was they were valued at, I don't know if we released that information, but it was a big deal. And but then the ones that I find really rewarding are stuff like Oshi, right? So like Michael Atwood, I just love that dude. He cares about Bitcoin. He cares about people, and he's trying to build these local communities where you're able to buy Bitcoin in all these different places. The business model is not clear. Anyone else looks at it like they would probably laugh him out of the room, right? And we supported Oshi because we wanted to succeed, and we think if Bitcoin succeeds, there's a very strong case that he can figure out a strong business model there, and actually start making real sats. And that's just super exciting. Like it's exciting, helping these small teams build what they want to build, and not have to focus on trying to like sell out their ethics just to get some money in the door.
We are gonna move on over to REKT.
Next up, we have REKT, sponsored by Crypto Cloaks. Crypto Cloaks is a Bitcoin-only brand. They sell a wide variety of Bitcoin goodies. Here you see the Honey Badger with a secret compartment where you can keep your FUD dice or perhaps a signing device. Up next, we see Phil with the Hodlonaut helmet. 50% of the proceeds go to the fight against evil over at defendingbtc.com. You can get 5% off all of the goodies over at cryptocloaks.com or cryptocloaks.co.uk. Of course, now celebrating Brexit, in their finally leaving the EU, even though they only joined the EU after we left. Anyway, yeah, you can get 5% off all of the goodies, cryptocloaks.com or cryptocloaks.co.uk. Pleb Underground.
We provide a history lesson with every ad. The more you know. All right, guys. For REKT, we've got this interesting story. It came out January 3rd. The godfather of crypto wants to create a privacy-focused CBDC. Chom developed the protocols that act as a basis for DigiCash, the world's first digital currency secured by cryptography. As the CEO of privacy-focused network developer Elixir, David Chom is working with the Swiss central bank to develop a CBDC that could also attract the crypto ecosystem due to its privacy features. I know that Matt definitely wants to know about these advanced privacy features. I'm totally interested. Named eCash 2.0, the new project aims to develop digital cash that would be, this is good, inalienably private and quantum resistant to counterfeiting. We're going to come back to this unless Matt wants to throw something in right now.
I appreciate Chom for all of his work that he's done in the past, but I mean, he's always been a bit of a shitcoiner.
Yeah, this is rough. Okay, we're going to keep going, but dude, inalienably private and quantum resistant to counterfeiting. Yeah, we're going to dive into this a little more later. It all started when Thomas Moser, a board member at Swiss National Bank, invited David Chom to Zurich for a conference and told him he wanted to make eCash great again, asking for his help in a new project. Moser couldn't understand why people weren't using eCash for CBDC. Chom started explaining big banks have too much to consider in terms of reliability and future readiness. So they're not eager to invest in something that isn't quantum resistant. All right, that's the second time we see that. This is very important. We need to pay attention. Quantum is going to destroy everything, and we need to be afraid. As part of the project, which is internally called Project Tourbillon, Chom developed a cryptographic protocol that proves a CBDC can protect privacy by censorship and quantum resistant, scalable, and even compatible with decentralized finance. That's right, guys, DeFi blockchains. One of the goals was to make the total supply number of coins transparent. Wow, this is some good stuff. Transparency of the total number of coins. I feel like that's been done already. First, the project team tried to use the legacy eCash, but quickly realized it wasn't a good fit for what they had in mind. That's why the BIS Innovation Hub, which totally sounds like an oxymoron. There's not a chance there's any fucking innovation coming out of there. Swiss National Bank and XX Network based the joint project on eCash 2.0. Chom noted that user-controlled privacy, the best feature of the original eCash, carried over to this new project. Chom pointed out that privacy is pivotal for banks, along with scalability and blockchain compatibility, as the public is very concerned about it. He noted the European Central Bank's public call for comments about CBDC, highlighting that 40% of the comments were about privacy. Okay, so look. So if you guys don't really realize what is happening here, they're trying. The narrative is that they care. They care about your privacy. They know that you're concerned about privacy. They know that you're concerned about security. And they want to let you know that they're paying attention to it. I just feel like this is insane. Anyways, here we go. You can withdraw $500 every day with your ATM card, but you can't walk into a bank and withdraw $1 million in cash. That's privacy for the people, Chom explained. It should be similar in electronic payment systems, he noted. Those systems should make it very difficult for someone to gather enough and use it for bad purposes, like hiring a hitman without being noticed. Okay, I understand they're using the hitman analogy, but the reality is that that's not the people they're censoring. Okay, like that. You're talking
also
about
hitman, like any sort of private like contracting, like it's not clear, like it's ridiculous.
It's completely ridiculous.
It's a terrible analogy, but like just a brief thing on quantum. Quantum actually refers to a one-to-one behavior. So actually, Bitcoin is the only thing that is quantum because 1 Bitcoin equals 1 Bitcoin.
All right, Chom envisioned a privacy system in which it's possible to prove a user knows their secret phrase without revealing it. It's a relatively new approach to that Chom called inalienable. The name inalienable key is derived from its key ability. Get ready, I'm going to blow your mind here. This new private key type cannot be given or taken away by nature. The key itself is a phrase or a sentence that can be easily memorized by the owner, but it's impossible to guess by third parties. This is just revolutionary. Within the context of central bank digital currencies, when a user wants to join the CBDC system as a user, they can go to a bank office to prove that they know their inalienable key by confirming specific placements of random letters in the phrase. Once the user confirms their identity, they can establish a whole family of related pseudonyms that can't be seen together, although they are all linked to the user's passphrase, which of course the bank has access to all of this information and of course can pull all of this information together. In the inalienable system, the user doesn't have to go through the physical confirmation step after the first time. They can send their confirmation electronically and also create pseudonyms for every specific situation, which of course, every single one of those pseudonyms is all linked to that one identity. They can represent that user paid their taxes this year, or they have graduated with high honors, Chom added. If they're asking for proof about any of those, they can use one of these pseudonyms and confirm it in a zero knowledge way. So look.
Can I just briefly say zero knowledge anything is the most like stupidly named thing ever by computer scientists or whoever named it, because to anyone outside of computer scientists, the concept of something being zero knowledge sounds retarded.
I just want to know what this inalienable identity really is. I mean, this just sounds like some made up bullshit. And the amount of times that they mentioned the quantum resistance?
Yeah, that's a red flag.
Is this really a concern, Matt? I mean, I rarely hear about I heard about quantum when I was a shitcoiner. That's when I heard about quantum, when I was being fooled by the shitcoin narrative.
Yeah, I mean, a lot of people like to talk about quantum resistance. Not an expert on that field at all. One thing that I thought was interesting was I always thought like the argument, and when I heard about quantum, I mean, in Bitcoin land, the argument I always heard was we used to pay straight bare pub keys, and then we started doing pay to pub key hash in terms of which address you pay. And that was because that means that you are quantum resistant if you don't until the time of payment. Because your pub key isn't exposed. But then we added Taproot, and Taproot's just paid a bare pub key, and our Lightning nodes have pub keys that are public. So I guess that argument's out the window, but it's way above my pay grade. But I agree with you on a general premise that pretty much everything in that article just screams red flag. The inalienable stuff, selectable privacy, like the idea of like status level, like selectable privacy is just like usually a massive red flag. And then last but not least, like at the end of the day, could governments presumably make real privacy preserving CBDCs? Yeah, technically.
Technically they could.
In any scenario, will they choose for you not to go the surveilled method and go for a private method? No fucking way. It's just never gonna fucking happen.
What are the incentives?
Never gonna happen.
Exactly.
You'll never have privacy. You'll never have privacy from the government on government sanctioned systems. You don't have them today.
Bingo.
You're not going to have them going forward. It just won't happen. And anyone who's like thinks that you can work with them is either trying to scam you or they're an idiot and don't realize.
I think it's comical. I think it's comical that essentially people believe that a person becomes part of the government and somehow they're part, like somehow this entity that is government can do better than the individual. Like somehow the entity that is government can be well, obviously provides the violence, which the individual cannot do, but also can do the virtuous things, which I think makes absolutely no sense because the government is made up of these individuals. So this idea that they're going to provide privacy, no, it's okay. Your neighbors aren't going to know what you're spending your money on. Well, how do you know my neighbor's not part of the, like, it just doesn't make any actual sense. It's an illusion. It's an illusion of privacy. And then they try to throw in this weird thing about the knowable maximum cap. So they actually, I find that's I think that's kind of like a cap to Bitcoiners. This is how stupid or ignorant or naive they think we are, that we just want to see a transparent cap and we're all good. We'll take your state money. Why not? You can have all the control. I just need to be able to see the number. I'm shocked.
To be fair, so like Chom's original eCash proposal had two major issues. The first major issue was there was no inflation verification. Like you couldn't tell if the cap was being held. So it kind of makes sense that he's highlighting it. And then the second issue was that it was directly integrated with banks and it was like using fiat as the back end, right? So as probably most people in your audience already understand, is if you're holding Bitcoin, if you're trying to use something that's pegged to a real life good, like a gold backed currency or a like a tether where it's backed on dollars, you have to trust a centralized party to essentially be managing those reserves in the real world, and there's no way for you to cryptographically verify that's the case. So with Bitcoin, the big revolution was that it's this native bearer token. It's this actual token that exists, in the fucking code, right? Like it doesn't have it's not a separate system. It's part of this system. It's a native bearer token. So we can transfer value without relying on a trusted third party that's pegging it to this outside thing. And then what's really interesting is there's a new project. Well, there's two of them, Fedimint and Cashew, which are essentially doing Charming eCash on top of Bitcoin. One thing that I'm really big on in Bitcoin is the projects that I like to pay really attention to are the ones where it gets me a lot of hate when I talk about them publicly. And so Charming eCash is a really interesting one. It's a fucking fire rod. And that's because so you can get the privacy benefits of Chom's eCash on top of Bitcoin using native Bitcoin. So you don't have to worry about that outside peg part. And you don't have to worry about the interoperability between mints because they can all pay each other via Bitcoin. But you still have to worry about the inflation issue. And you still have to worry about rug pull risk. So with Fedimint, they try and federate it. So like it's a multi-sig custodian. So like multiple people need to work together to rug you, which is a trade-off. Right. But I think that's really interesting. And I think it would be really funny or ironic or typical, I feel like, in life, if Chom's biggest accomplishment turns out to be these Bitcoin Chaumian mints that he had nothing, he created the original concept that it was built on, but like he didn't actually build because he was just too busy trying to build the CBDC or the thing attached to banks or this or that. And meanwhile, the real revolution was his tech getting put on top of Bitcoin.
It's a very good point. And it's really, I'm sorry to say it's sad to see. It's sad to see that person go and work with the Swiss government to create a CBDC. I understand incentives, got to feed the family, roof over the head, all that good stuff. But sometimes, man, you got to be like, no, I'm not going to be a part of the machine that just enslaves people.
I think what you're both saying is that you want more privacy without getting pegged.
That wraps up the REKT segment, and we are going to move on over to the Hopium. The Hopium is brought to you by Represent. Check them out, representltd.com. Bitcoin threads by a Bitcoiner. I'm wearing the Bitcoin branded clothing right now. Check it out. Very nice threads, great quality. Check out PlebUnderground for a 10% off coupon. It is pleb-underground. And go check them out, representltd.com.
Okay, so the one and only story we have in Hopium this week, a tweet from Mr. Cohen here.
Leron's a good dude, good Bitcoiner.
Yeah. Basically, recently there's been a bit of a fight going on Twitter. That I'm hoping Odell can help unpick a little bit for some of the less technically literate Bitcoiners that I think watch our show rather than watch some of these more technically challenging shows. But essentially, Nostr has taken off, which is a decentralized protocol, not a platform, that can be used to communicate between people peer to peer. There are already a bunch of clients running on top. Damus, an app by William Kasserin, is very user friendly on iOS, but there are also a bunch of web and Android platforms. Nostr.rocks, I believe, is a very popular one, but there seems to be one popping up each week. But there's been a bit of a fight, and it's gone on for a few months between Nostr devs and some of the devs working on Web 5, working on DIDs. There was I believe he used to work for Microsoft, and then he got poached by Jack to work over at Block. Daniel, who's I've listened to him speak a couple of times. He seems to be a very smart guy, but there seems to be quite a divide about whether DIDs are necessary for decentralizing communication and social media and the web in general, and whether Nostr, though a functional social network, perhaps is thinking a bit small and is working in a way that can be isolating, rather than necessarily working with Web 5 standards, which is what some of these guys are trying to set up. Guys, what are your thoughts?
Is that a question?
Yeah, I don't really know the question. But yeah. So like to me, I don't know. I'm bored. I don't really see the need for Nostr right now, though it's, of course, could be useful if Twitter eventually gets shut down.
Yeah. So I mean, Nostr's cool because it's just fucking simple. It's fucking simple and it works. Fiat Joff didn't overcomplicate things, and that's one of the reasons he's one of he's one of the best Bitcoin contributors we have, period, because he's super contrarian. He always thinks outside the box. He gets into fights with people, which is hilarious. Like most of the contributors of Bitcoin I like are very visceral people. Like there's you either love them or you hate them. But Nostr is just very simple. It gets the job done. It doesn't aim to be all the things. It's at its core, it's a communication protocol for text-based communication that is tied to public keys and private keys. It's not inherently P2P, but you're able to run these relays really easily, and you're able to host your own, and you're able to move around between the relays. So if someone follows you on a pub key or messages you or communicates with you on this pub key, they can follow you around to different relays. And
so
it,
a bit
it
like
kind of
Lightning, in terms of the if you want to send a Lightning payment, that it gets kind of routed by.
there's no routing. You essentially are connected to the same relays, and that's how they can see each other.
And they all dumb relays. They just relay everything. There's no kind of filtering.
Where you can put filtering on it. You can whitelist pub keys. You can do keywords as well that will block people. Fiat Joff has one relay he calls expensive relay. And the only way you can use that relay is if you pay him, I think 100 sats or 500 sats. Not really that expensive yet. But you pay him sats, and then he whitelists your pub key on your relay. But the point is and this is another, just going back to the 1031 conversation, right? Is crypto VCs and Silicon Valley VCs have burned millions of dollars, hundreds of millions of dollars trying to build a Twitter competitor that has its own token, right? That they could dump on retail, all this other fucking shit. And they have absolutely nothing to show for it, right? And then Fiat Jeff is bored over a couple of weeks and just builds out the Nostr protocol. And then Will loves it. and just starts building on top of it, and a bunch of other contributors come and build on top of it. And now it works. It's working. It's there. There's a community there. I use Nostr now. There's different features getting added to it, and they're just kind of building in production and seeing what happens. And there's no direct, obvious path to monetization. And that is way more interesting to me, because it's just this proper, it really is the free open source ethos, right? Is this idea that Fiat Jeff's license was, everyone argues over what's the best open source license and all the different trade-offs. His license was 2 words. It was just public domain. He just fucking shipped it and was like, do whatever the fuck you want to do with it. And now everyone's able to iterate on it without permission. So all of that's really cool. And there are similarities with the DID ecosystem, because the DID ecosystem is the idea that you have a public key that's your identity.
Mhm.
You hold the private key yourself, and then different things can get signed on top of that public key. So it's also public key, private key based. But and I love CSU Wildcat. You mentioned Daniel Buckner. He's amazing.
Mhm.
And I think a lot of the people working in the DID space are well-meaning. But it's a very like bureaucratic process. It's this big overarching like standards kind of body kind of situation. They're trying to do a lot of different things, and it's really trying to tie into, there's a lot of similarity. They're trying to like tie into the state, and like how, like, you could have optional KYC, and some people can have, like, the New York DMV can sign your DID, and then you can use that as well. And well, Nostr is just like generate a pub key, and then you can use it for communication. It's a difference. And the thing is, like, I think the idea, like, oh, let's collaborate, it's like open source, do whatever the fuck you want. The whole reason we're using Nostr today, and there's very few use cases and like real world uses of DIDs, is because of the philosophical differences there. And just ship open source code and see what happens and iterate on top of it.
Yeah, and you see Jack investing or donating to both.
He donated,
right? He's giving out grants to the Nostr guys, as well as, of course, having Daniel now on staff, working on DIDs.
That's a perfect example. Again, like 1031. Like, you think if Will JB55, like, I hope he gets funding for Damus, right?
Mm-hmm.
And if he doesn't need 1031 to give him funding,
didn't he? I mean, I think he certainly said he's now on Bitcoin. Maybe he hasn't got a grant yet, but
no, his fiat job fired him.
Yeah,
okay? And he got he got a portion of the donation from Dorsey. But my point is, I'm not selfish about it. Like, if he can find funding outside of 1031, that would be great. Like, I would love for him to build Damus, build it out and see where it takes us, right? But I will just say that the overwhelming majority of venture funds would look at Damus and be like, how do I monetize this? Why is there no shitcoin attached? How do I lock in users so they don't switch relays and they stay in my app, right? Like, they would be asking all the wrong questions. Well, meanwhile, we look at Damus and we're like, JB55, like, this is fucking amazing. Like, how can we support you? It's a completely different philosophical perspective at the core level there.
How do you sell that to your investors? The idea that there
difficult.
isn't necessarily a kind of direct return, or the vision for that return isn't clear. They're happy for you to kind of invest in this kind of range of companies.
It's difficult
in their life cycle.
It's really, really difficult. But fortunately, the majority of our investors are ideologically aligned. They're Bitcoiners. Like, even if they represent institutions, they're Bitcoiners. Like 95%, 96% are like just ride or die Bitcoiners, even though they might be running, a family office or something, right? And that's not all their money necessarily. So they, for the most part, understand it. But it's a balancing act. First of all, like, the ones that are a little bit more out there, like, are usually smaller investments, right? And like, you kind of mix them together, right? The return is together, and a lot of them are complementary to the ones that are very obvious value adds. Like, Like we see, I'm trying to make sure that, so we have like a lot of Samurai Wallet is a good example. I mean, Samurai Wallet is already, they're a profitable business. This is a good old fashioned profitable business. They don't plan to go public. They don't plan to ever sell. You know, they just make sats. They do coin joins for people. They make sats. It's just a good old fashioned profitable business. That's a very obvious selling, right? But then when you have something like Damus, where it's like, we're not really sure. It's like, okay, well, you know, we believe in this founder. We believe in his project. We think it can be fundamentally game changing. We think it can empower Bitcoiners and make the Bitcoin economy stronger. And the investment size is according to the risks that are apparent in it as an investment, right? You know, we don't know the exact return profile. We don't know how they're going to necessarily monetize, but he needs this money to build it out. We have a lot of faith in him as a founder, and we're going to support him. But it's a real balancing act, and that's why it's, you know, it's not on the people don't understand what goes on behind the scenes with a lot of these things. I mean, even with like something like OpenSats, where we're getting, you know, open source contributors 100% donations. Like the amount of wrangling people and stuff like that, where OpenSats, that like we founded OpenSats, we take no money from OpenSats. 100% pass through. Any funds that come into OpenSats go to the open source contributors. And like I have to be on calls with people for like an hour and a half. I got to go meet people in person and stuff and be like, can you please, you know, write a check for core devs or HODLNOD or something like that? Like defending BTC, getting people to do defending BTC with me. Because everyone talks a big game publicly, right? And then they're like, I don't want to be on the face of the fundraiser. Craig Wright might sue me.
Question.
Right? And then they all just disappear on you.
Yep.
Question for you. Given the success of memetic warfare, do you think OpenSats should be donating to memers, open source memers, especially given that core devs don't seem to be looking after these sats all that well?
I would say that if you go to opensats.org, and you believe you're an open source contributor to the ecosystem, to the open source ecosystem, you can apply to be listed on OpenSats. And then, so OpenSats is double fold, right? So we have a general fund. It's twofold. We have a general fund where you can just donate, and then our board decides where that money goes, right? And then also separately, we have projects and individuals listed on the website where you can go and choose who you want to donate to, and you donate you donate to us, but it goes to them, right? Like you're earmarking it to them. The board isn't deciding. So if an open source memer, a community member that is supporting open source software, wants to get listed on OpenSats and people want to donate to them through OpenSats and get a tax deduction, I'm pretty sure that would be completely fine.
Guys, so you heard it here first on Pleb Underground. Open source memers, you have a very lukewarm invitation from Odell himself to see if you can secure some of that lucrative funding. Over at OpenSats.
I would tell you, Walton, it's not lucrative funding. Like we have, you know, it's so difficult.
No, that was just another pun with the Luke. Sorry.
Yeah, I'm aware, but I like it is. We can't raise, like it's so hard to raise money for OpenSats. People are, people talk a big game, but when it actually comes time to donate to open source projects, it is really, really, it's just like, it is extremely frustrating process. People do not, companies, like I try and talk to these companies. I'm like, look, you know, if you donate, you know, $100,000, $200,000 to open source projects, first of all, you get a tax deduction. You made millions of dollars this year, and you can help support Bitcoin.
Surely the pitch should be,
and we just don't get it.
Surely the pitch should be, hey guys, you know your financial models that in part are built on Bitcoin growing its user base and being worth more. Do you know why that will happen? That will happen because of this development that will only happen if this guy keeps working. Do you think maybe you want to chip in?
Yeah, I mean, it's basically the pitch. It's basically been the pitch. And I don't want to sound like I'm not grateful. First of all, I don't take any of the money myself. But I am grateful for the people that have contributed to OpenSats. But it is a grind. It is absolutely a grind, and that's part of the reason why. Part of the reason why I launched Citadel Dispatch as a podcast that is completely ad free is because I saw these open source devs that were essentially doing the same model, right? They don't have ads; they're just trying to accept donations, and it's a grind. Donation based projects are a grind, and yeah, so it's just interesting. I don't know. I don't realize how I got down this tangent.
No, it's good. This is useful Hopium. So with the reason I brought up the article from Liran, which I didn't really dive into, but to me, I think this is very hopeful. Bitcoiners building things and showing that things can once again be built without tokens when they're not money based. It's a very positive thing. The use case is quite open, and I think we're certainly in the early days, but it's something new, something exciting, and you see the developers of Nostr getting grants, and that is a reminder that there are Bitcoin developers that maybe don't get enough in grants. We talk about here about OpenSats. Guys, if you're listening and you maybe have a spare sat or two, please head over to OpenSats, where 100% of your sats will be going to your intended donation.
I mean, that's the dream of OpenSats, is like, so like the key differentiation here. 1031, I think what a lot of the haters don't understand is the target is not plebs at all. OpenSats was, obviously we would love corporate donations, but my vision with OpenSats when we founded it was an easy way for plebs to just basically like auto stack to devs, right? Because we accept credit card payments even, and if you pay with credit card, it automatically stacks sats with it, and then we hold the sats and then pass the sats on to devs. So like the idea that if we could get plebs to do $10 a month, you get like 100,000 plebs doing $10,000 a month. There's probably not 100,000 plebs out there, but that's $1 million a month to open source development with no fees.
Yeah.
And it's also $1 million worth of buy pressure on Bitcoin. At the same, everyone wins. It's just a beautiful win-win situation.
Especially the memers that now can apply for some of those sats.
Exactly.
Excellent
well, there's
news.
like not much sats to go around right now, but yes, in the dream world. So I would say to the memers, if you really want to, start getting support through OpenSats, maybe start memeing OpenSats donations as a thing, and then get listed on OpenSats at the same time. You get to, flywheel effect, right? Increase donations to OpenSats and get listed on OpenSats. That was the Hopium. Boom.
That was the Hopium.
Excellent stuff. All right, guys. So look, we are going to wrap up the show, but before we do, Matt, how do people find you? And obviously we're going to list all the links in the show notes, but what is the easiest and best way to get in touch with you, sir?
Well, first of all, search Citadel Dispatch in your favorite podcasting app, but all my links are at mattodell.com, and I recently started a new homepage for like guides, which is werunbtc.com.
Very cool.
Thank you for having me.
We're gonna have to have Matt back to talk about why privacy is needed, despite the fact that Matt Odell has been a present public figure for many years in the Bitcoin space, seemingly unharmed to date.
Oh well, I read that tweet too. I would just say really quickly that privacy is not secrecy. Privacy is the ability to selectively reveal yourself to the world, and you can talk about privacy publicly and not be a hypocrite. And I'm glad that more and more people are doing it.
Yeah, I really like the way that you said that. It's very important, right? And privacy is not a crime either, right? Even though the mainstream media tries to make it seem like one. Anyways, guys, this was our show. Thank you so much, Matt, for joining us on the Pleb Underground. Don't forget to like and subscribe. Don't forget to check us out on our audio-only platforms, Apple Podcasts, Spotify, and Anchor. If you want to stream us sats, check us out on fountain.fm. You can stream us sats through Breeze. Walton, how do we end this off?
Fuck shitcoins.
That's right. Fuck shitcoins. Catch you all next time.